Okay, we're gonna talk trade of the day here. It's gonna end up being Disney. And sometimes it's not about picking the biggest winner or the biggest loser. It's the best learning experience. I say this over and over again. There's no chance anything provided me a better recap or analysis than Disney, because in a weak market like we've had today, selling off like this, sometimes relative strength is good. But I was saying it all morning long, that even the strongest name, a relatively strong name, is not going to get going without the help of the market. But I didn't really heed my words well enough. Now, first things first, always going to start with the higher time frame. I have the 60-minute chart up here. And Disney, it was just sitting in this nice consolidation and finally breaking out of its bottom channel, taking out this 99.25 level at the open, and then getting up into this 100 half zone where it looked like we had room to 103. So the context here was reopening back in Shanghai, positive catalyst, travel names looking good, the casinos were looking good, Disney was lumped in that group, and just strong all morning long. Now, what we actually end up getting, no real dip buy opportunities at the open. Sometimes we do favor those. I'd have been involved if we had it, but it was a simple, clean break of that 99.25 level at the open. We take the breakout trade right into 100. I said to myself, actually was mentioning this, I'll take this out in front of 100 with the anticipation that at 9:30 you tend to get that whipsaw action, and we'll get back in when it does that whole rug pull. Now, there were some dark pull prints down here. It did not print down to 96, obviously, but it did come down and give you a re-entry point at about 99.35. I wasn't fast enough to get it because I was too busy getting run over in Nike at that particular time. But I did end up getting back in when it broke 100. You can think of this as one trade. You can think of it as two trades. Really almost irrelevant. Of course, we're the same trader here. It's not like I'm putting this on in some separate account. So really it is one overall trade playing that trend. Once it got to 100, the market started putting a turn. There's no question about it. You had multiple names reaching highs and turning around. Tesla hit 750, just to name one. Meta was running into resistance and turning around. Market puts in a pretty large dump. And Disney, for its best efforts, holds the high end of the channel. And it does a really good job of doing so. But every single time the market would make a big leg down, I'm taking some out in front of that high. It manages to hold support right where we like it. Come back to that high of the day, and again the market dumps. And I get out another time, still holding on to a piece of it. Now here's where I lost sight of something. One of the things I've been saying when you have these names, sometimes post earnings, is if it doesn't break the low, there's only one place for it to go. Well, what does that mean when I'm looking at this channel and there's that 100.5? If we can't break that high in a tanking market, then there's only one other thing that can happen here. We did the right thing covering, and then also being able to get out when it tries to reclaim our 99.30 price. Yeah, I could have held through here and then got out for another winner. Overall, we'll be up on the trade. But if it can't break the high, in that situation when the market gives it up and we reclaim that low, I should be looking for shorts. And there's no question what ends up happening once they run the stops at the breakout price, it tries to recover to the high of the day, fails at the same place. And I'm not saying you're going to get the short at 100 in this situation. I'm not saying you're going to get at 120 or the perfect entry price. But there's really no excuse for not having it back here at that 99.35. It's pretty obvious. When you have a situation like this, you have an obvious price channel that you are honed in on. When the market respects that price channel like you think it will be, and you get a massive turnaround like this to the downside, then you have to be willing to adjust your focus, go away from your bias, and understand that we're headed down today. And then therefore you need to use your price levels to work into a short position. Because if you didn't do it at the start, you were essentially chasing it $1.50 later. Now I'm up on Disney today because, hey, I liked it long and it was holding up relatively strong in a tanking market for quite some time. And we took profits when the market looked weak. But at the end of the day, there was a huge short opportunity on Disney when the market flushed, because at some point, and I said it myself, I just didn't follow through by taking that short position. The first step, of course, is covering your losses and not getting married to position. But the second part about it is asking yourself, if I was flat, what would I be doing right now? And the obvious answer is going short. Missed opportunity there on Disney today.